I'm Catherine Ross, and I'm here live from the NYSE with Action Alerts Plus's senior analyst Jeff Marks. Jim Cramer is out today. After a week of market volatility, and now we've got all of these tariffs. I mean, we've got to talk about these Mexican tariffs. Should investors be worried about them?
Well, look, I think that what it does, first and foremost, it adds another level of uncertainty into what the president might do next. I don't think many people saw this coming, which is why you're going to see the market down. I think that we could see this type of down, Jeff, for a couple days, as people are going to, first it's going to be just selling, and then people are going to try and figure out the winners from the losers, and then those are going to get sold off too. And then maybe by day three, you'll start to see some buying in some names that really are insulated from this. But I think that, you know, the economic type tariff policy with China is one thing. This is, I don't think many saw this coming. Now, it could get fixed quicker than maybe, say, China, because I think that there's more of a willingness to get a deal done here. But the market now needs to price in what Trump will do next, and that's going to take time.
Yeah, I mean, I got to say that right before the show, I was getting analyst messages in my inbox saying that this was a complete surprise to them. So I got to say, now that we're down about 300 points, is there anything that will put the market on the right track?
Yeah, well, a trade deal, right? A trade deal, any type of progress there, real progress. We have G20 coming up, so if we could just see better relations between the U.S. and China, that would be big. And any type of quick resolution between this and with this new spat with Mexico now, obviously a plus. But that's what it's going to have to take.
Let's jump over to retail. So Gap, which is our real money stock of the day, reported earnings last night. It was a big miss, very disappointing quarter. And you know, this just follows other apparel companies. This follows Canada Goose. This follows Abercrombie & Fitch. And it also follows our yesterday's real money stock of the day, PVH. So is this now the time to run away from retail, from apparel?
Yeah, it's a tough group right now because kind of like as what we're going to see with the market distinguish between the winners and losers, you're going to see that too. So on the margin side, the companies that can maintain their margins are going to be the ones that already moved out of China, and then hopefully also moved out perhaps Mexico too, just basically what's going on here. So you'll get winners and losers there. From a same-store sales side, Gap, negative 10 comps, that's really poor. So what I would say is you also want to kind of follow the trends and follow where people are actually shopping, because that will help you distinguish between the winners and losers as well, with who can actually produce positive same-store sales in this environment and who's just kind of stuck in reverse right now.
And while we're on the topic of earnings, we got to talk about Uber. They also reported earnings last night after the bell. They did not lose as much money as was expected,
Yeah,
which honestly feels a little funny to say
yeah.
to me. But I got to ask you, can Uber crush Lyft? Because they kept mentioning Lyft in their call.
I don't think it's as much as crush. I think what it's more is what they were talking about is some of the pricing environment improving in the U.S. Down the road. And I think what that more is less price gouging between Uber and Lyft, just trying to beat each other on price, and kind of working together to get their margins up and get better pricing opportunities there. And that's what a duopoly is all about, a duopoly being Uber and Lyft, because they kind of need to work in tandem to make sure that they can maintain the appropriate amount of price levels to actually keep their margins, to improve margins and keep them at a decent level to kind of weather this storm of operating losses right now. So I don't think it was less Uber versus Lyft. I think it was more almost them kind of working together.
That's an interesting take. Okay, so before we go, I got to ask you about Salesforce. They report earnings next Tuesday, and I know that this is something that Action Alerts Plus will be talking about. It's a big holding. We'll be talking about it more over on the video next week. But, you know, what is one takeaway that you're looking at right now ahead of the earnings?
Yeah, so I think what investors need to focus on is billings and just visibility into their 20% compound annual growth on the top line that they expect to do for the next couple of years. If they can produce good billings results and really show that, give the market confidence that they can do that, it might be all right. But it's tough in this market. Workday produced a good number earlier this week and the stock got hit. And obviously everything's going to be down right now in this type of market. So, it could be a good quarter, but we'll have to see how the market kind of reacts to it.
Thank you for joining us, Jeff. And that's all we have. The time that we have for today. For all of you watching on TheStreet.com or on Facebook, we are now jumping over to our Action Alerts Plus members only club video on ActionAlertsPlus.com. Thanks for joining us. I'm Catherine Ross, and we'll see you next week.